Rand yesterday, 684 very briefly. Didn't manage to stay below that 685 level, and we have discussed it on the show. 685 is offering some resistance for the Rand at this stage.
Morning, Stephen. Yes, it certainly looks like it. I mean, the Rand bulls finally broke through that level 685 yesterday, really on a combination of a weaker dollar and quite a strong gold price. But as you say, they failed to sustain that move, and the Rand pop back now is now trading closer to 688 this morning.
Well, we had a couple of bits of news out yesterday. We had those rising geopolitical concerns that pushed that gold price up to $1,444. At the same time, Moody's downgrading Greece by 3 notches. To what extent do you think that led to perhaps a bit of a respite for the dollar, which in turn might have pushed the Rand back up above 685?
Well, Stephen, it actually looks like the dollar was more on the back foot yesterday, particularly when compared to the euro. Some comments that have recently come out of the ECB and by President Trichet seems to have been priming markets for an imminent rate increase in that area, and that certainly has boosted the euro. So as far as yesterday is concerned, I think that the dollar was for most part on the back foot, and we saw the Rand having more of a correlation with the euro and tracking that a bit higher.
Local factors yesterday, we had reserves data out for February, and it looks like the SARB hasn't been quite as active in the market during February as it was in January. We also had the Finance Minister, Pravin Gordhan, speaking yesterday and also saying that the strong Rand is helping to curb some of the inflationary pressures which are going to be coming through at this stage. Do you think they're changing their tax perhaps on the Rand?
That's quite interesting, Stephen, because as you saw, although the overall reserves number did tick up in February, it was largely due to revaluation effects, and that could imply that the National Treasury and SARB slowed their pace of reserve accumulation in February because they were concerned about the recent bout of Rand weakness. And when you add the Rand's recent or earlier weakness in the year and couple that with the rising oil price, then you have a potential for quite a big impact on inflation. So it may well be that they decided to slow the pace of reserve accumulation in February with those inflationary pressures in mind. So it was particularly interesting that later in the day, the Finance Minister then alluded to that by saying that at current levels, the Rand is actually helping to contain inflation, and sort of almost suggesting that the Treasury wasn't entirely unhappy with the Rand at current levels, although he did say that, as always, the government is aiming for a stable and competitive exchange rate. But it was quite interesting that he then did touch and say that in this instance, the Rand is actually helping to contain inflation, and that would definitely be positive in terms of keeping interest rates low, and of course that has implications for growth this year.
Nothing much on the global economic calendar today. Locally, we do have business confidence for the first quarter coming through. Expectations there?
Well, Stephen, we'd certainly be hoping to see an uptick in business confidence. That index largely moved sideways last year. It started the year at about 43 index points and ended the year at about 47. So really not too much movement there. And of course, at those levels, it still implies that less than 5 out of 10 of the senior managers that are surveyed across sectors are actually happy with prevailing business conditions. So given the acceleration in growth that we saw in the fourth quarter and our expectation that growth will improve throughout 2011, we'd certainly be hoping to see that reflected in business confidence and see an increase in that index today.